there's this weird sense where it seems like everything in the world is becoming like Vanguard, where you have this Vanguardization of everything and you have an index of everything. In some ways, you're driving that in the art market. Like, how do you think that plays out? Like because you can think of all these other collectibles like art or baseball cards or something. And then of course you could have like real estate and you could have all these other types of things. Like, do you think we just get there in like all the major asset classes?
Well, I mean, I do think that probably happens for a lot of major asset classes, but I think things like baseball cards are not, I mean, I say this a lot, and I would even say this about cars, that they're just not expensive enough to securitize. The total value of a baseball card is not high enough to justify the cost of securitization in today's world. And that's definitely true in the US. I mean, the regulatory framework that we operate under.
But could you buy securitize 1,000 baseball cards or something, like collection or something, or
you could, but then like as an investor, I can just buy one of those 1,000 baseball cards, right? Like I don't
and just
really
feel like you own it. Okay.
Yeah. Okay. I can just own it. So I mean, I think that's one of the things.
So if a baseball card sells for $20,000, like, well, any high net worth person could just buy it, and and they could pay $24,000 if they really want to own it or something.
Yeah, and I think that's generally what we see happen with things like baseball cards and watches and wine and like all of those asset classes. I think people struggle with like, why do I need to invest in it if I can just buy it myself?
But I mean, I could buy one share of Apple stock. Anyone, that's pretty easy to go do and stuff like that. But I still invest in like an S&P 500 because I want like a low cost basket. Obviously, buying, and stock is very cheap to buy. The transaction fees are really, really low, so it'd be easy. But I still invest in the S&P 500. Whereas like these collectibles, there's high transaction costs. It's hard to get. You have to take care of it. You have to manage it yourself. So if I really want to like get an option on the baseball card market, I don't know how I would do that today.
Yeah, and we have seen there's been a lot of asset managers that have approached us to add art to kind of a general collectible strategy.
Yeah.
I think a lot of those general collectible funds haven't really gotten that much traction. One of the challenges is that when you look at collectibles broadly, art is 80% of the value of all collectibles. Things like wine, baseball cards.
So the 1.5 trillion is 80% of all collectibles.
It's 80%. Yeah. So it's all of those other things.
I had no idea that the other collectibles were such a small percent. So all the other combined is just 20%.
Yeah. And that's
wow.
I mean, but think about that qualitatively, right? Like your most expensive painting is $450 million.
Yeah, it's true. Okay. There's nothing even close to that, right? There's no like wine. I assume there's $1 million wine bottles, right? Or
I'm not a big wine guy. So
I don't know, neither am I. But I'm sure someone's paid $1 million for. I mean, I saw someone once paid $1 million for a tuna fish. So I'm sure that someone has paid $1 million for a wine bottle.
I was in Tokyo recently, and I walked by the restaurant of that chef that bought that tuna fish for $1 million.
Okay, yeah, exactly. I'm sure it's really good tuna. Like, I'm sure it's amazing. And what like if you had do you think of like artists by like market cap? Like, would you say, okay, this artist has X amount of market cap or something?
Yeah, definitely. Yeah, we think about artists in terms of market cap, turnover, appreciation rate, volatility, Sharpe ratio. We think about all those metrics at an individual artist market level. And that's the reality, right? Like if you look at someone like Basquiat trades $200-300 million a year, has several $billion in market cap.
Basquiat, one artist is $200 to $300 million a year.
Yeah. I mean, Picasso.
So 0.5% of all transactions in dollars are Basquiat.
Yes. And the top 100 artists, I always tell this to parents who have children who want to become artists. Uh-huh. The top 100 artists are 64% of the value of the art market overall.
And by the way, that's top 100 include a lot of dead people too.
Yeah, and I was just going to say,
the top 100 athletes today are all living, right? So maybe Muhammad Ali still makes a lot of money or something. But
yeah, out of the top 100, the majority are not living. So it's really, the career as an artist to actually become, a very successful living artist in today's world is very, very, very difficult.
Interesting. Okay, that's is this something like, how did you get into it personally? Is this just something like you were just kind of collecting on the side and then like got passionate about it?
Yeah, I mean that's basically it. Like I always thought it was a very interesting asset class because it was so inefficient. And I still think that's the same thing today, right? Like you look at most asset classes and they have very smart people who are, very sophisticated at figuring out how to invest in them. And you just don't have that in the art market today, right? It's really us with our kind of research team and our data science team that are competing with families who are buying paintings, and obviously families don't have the resources to kind of build the same infrastructure that we have. So, my experience was I started collecting in my early 20s. Built an important collection over 10, 20 years after selling companies that I had started, and saw the value of the collection go up, and thought, this is a really interesting asset class, but there's not a good way to invest in it. So that was the origin of Masterworks.
In some ways, like it's kind of like a REIT, right? Except you don't make rent on it.
Yeah, there's no income dynamic.
Yeah.
In our model today, people are picking and choosing individual paintings to invest in. So we don't offer fund products today. So that that's different as well. But
good point. Okay, so because they're passionate about a specific type of painting or something like that.
Yeah, I mean, we publish all the data on these individual artist markets when we launch new paintings to invest in, which we do now about every day, every other day. And people kind of build their portfolio through us launching new paintings.
And there's other models. There's like a company called Fundrise that does something similar in like maybe a much lower dollar for real estate. Like, how do you think about all these other companies that are in some ways very similar to what you're doing, probably going after similar types of investors?
Yeah, it's really us and Fundrise. So Fundrise focuses on real estate.
Yeah.
They just launched a venture product as well. But it's, in terms of scale, kind of at the $1 billion plus level, it's really us and them. We know those guys well. I think they're very smart. I think their investment products are actually
in their case. I think
their
main revenue is just like they take a small management fee. I don't think they have a carry on it. They just take a management fee. Do you guys have like a similar model or?
Yeah, for us, we have carry. So it's 1.5% management fee and 20% carry.
Okay, got it. So it's like a fund.
It's like a fund. We also have secondary markets where people are trading shares in these vehicles. We're not a broker dealer today, so we don't earn commission on those secondary market trades. But that is.
So if I spent like $20,000 to get into if I'm a small investor in one of these things, and then and now it's like you deem it worth $24,000, I could sell that to somebody who wants to buy into this painting or something.
Yes.
Okay.
Yeah. And I think I think for us, that's really important because we currently tell people to think of these as long-term illiquid allocations, right? If you're investing in a painting, think of this as a 3 to 10 year investment. And that's still one of the bigger obstacles for most investors. So the secondary market really helps address that objection of otherwise having to wait many years to receive a return.
And in Fundrise's business, fairly familiar with them, like really anyone can invest in it. Like, I don't think you don't have to be like a qualified investor, but I imagine with you, do you need a more sophisticated investor of a higher net worth to be allowed to invest or?
No. So all of our products are public products. So anyone can invest. If you're interested in investing, we onboard you with a conversation with a financial advisor, who's non-commissioned. They have a fiduciary obligation to make sure that you're making good investment decisions. So they'll recommend particular paintings, particular allocations. Most of our investors start with less than a 5% allocation of a portfolio to art, and they grow it over time.
Okay, got it. Interesting.